Welcome everyone back to Pete's Investing. This is a special edition video. I'm just going to answer some Q&As that I've received from some friends over having cups of coffee from regular meetings we've been having. So hopefully this helps answer some of your questions as well. And the questions are, in summary, why do I trade the 15-minute chart and not the daily or another time frame? Why trade demo blue chip trades shown in these videos, and why not any other blue chip shares? What returns are gained from these trades? How much time should I spend daily to trade these positions? And are dividends or costs factored in the returns shown? And what other indicator systems have been tested? In other words, why are we just using the particular indicators such as the CCI 100 in these videos? So let me go back to the first question, and why do we trade the 15-minute chart and not another time frame? Well, you can trade another time frame. It's just basically the 15-minute chart I've shown to be the most consistent in terms of getting cash flow happening. Let me explain that further. So let's look at the CBA bank here, and here we're looking at a 15-minute time frame. We're trading $2,000 lots of shares. So every time we enter, we buy $2,000 worth of shares. So this is roughly a 17-month time frame horizon of the chart shown, 17 months. In terms of 15-minute time frame on a 15-minute bars. So as you can see here, we've generated $1,143 in terms of buying and selling the trades, each of these trades opening and closing. If we were to change that to a hourly chart using the same program, again buying $2,000 lots, a couple of things happen. The time frame goes back much more than roughly 17, 18 months. It goes back a number of years. So on a 1 hour time frame chart, you can see there it goes back to 2015, end of 2014. It also opens and closes $2,000 lots of shares, but you can see there the returns are only $1,400 versus the $1,100 we had earlier for the 15-minute time frame. If we traded on a daily time frame, the same logic happens in terms of the programming. It opens and closes, but instead of going back a number of 2 or 3 years, it goes back to the end of 2001. And it only generates $2,400 versus $2,400 worth of revenue over that period. Now you might say, well, you need to change your indicator time frame to cater for that, and that's correct. Now we're using the CCI 100 here. You would have to make it a lot more volatile, in other words, a lot more entry and exit points to get in and out of your trades. And you'd probably have to change your MA200 moving average from 200 down to probably, I don't know, a 20, and I haven't tested that specifically. Others to say there are many ways of trading, and I'm using the CCI 100, which tries to emulate a daily time frame on the 15-minute time chart. So the CCI 100 here equates to roughly a CCI 10 of the daily time frame. Now I've also tested that on a daily time frame, changing the CCI 100 to a CCI 10, but that still doesn't generate the same amount of cash flow that the 15-minute time chart does. Then you might ask, well, I'm not awake at certain, or I'm not available at certain hours of the day to open and close these positions when these entries are made. So let's look at this particular trade back here. It entered the trade here on the 4th of May. Oops, don't mean to click that. It entered the trade here on the 4th of May, and that was at 1300. If you look at down here on the little window shown here, it opened on the 4th of May at 1300. That's when it opened that trade. Now you might say, well, I'm at work at 1 o'clock in the afternoon. That's fine. What we're saying is during that period, in that time frame of that day, let me just blow it up a bit more. So you can see there the market opens at 10 o'clock in the morning and closes at last trade at 15:45 or at 4 o'clock that day. So that's the day's trade. What you could do is, as soon as you see that indicator, or as soon as you get that entry of the CCI breaking above the zero, you would enter the trade. So you could have entered the trade anywhere there in that time frame if you were available, obviously. Or if you wanted to make a hazarded guess, you could say, right, this is approaching the CCI 100 breaking above the zero. You could have entered it back here if you're available and not available here. In other words, it's a thumb in the air entering in anywhere in this period for that day's trade if you thought that was going to break that CCI 100 above the zero. Likewise, for the close, you can see here that the CCI 100 was still above our zero line, and according to our trading rules, if you followed the simple trading strategy, it broke down below our CCI 100 down here. So again, if you're not available at 12:45 on the 19th of May to close that position, you can see here that period there was the day's trade. So that there was the Wednesday. You could have closed out any time there, or even probably better up around here somewhere. That would have saved you a couple of dollars as well had you closed out a bit higher. So that's the reasoning behind the 15-minute time frame. The program, I'm running the program that shows you an automated version of trading, but you could have done this manually and done this on a manual basis. So I hope that's helped explain the 15-minute time frame chart. It just helps a better cash flow rather than trying doing it on a daily or even weekly basis. But there's nothing wrong with you doing that and trying to trade that if you fine-tune the indicators to do that. Why trade and demo the blue chip trades shown in these videos? Well, remember always in each one of my videos I do go through the weekly reviews of the indices and the weekly review of the blue chip shares, but also go through the strategies I use. So please, if you haven't already, refer to these trading strategies, and that helps explain why I'm doing what I'm doing in certain areas of my positions and my trading entries and exits. So I'm doing in the blue chip trade shown in these videos. You can find that in more detail. Strategy on choosing which shares to trade, posted on the 20th of January 2021. I'll go through some in detail why I choose the trades I'm choosing. Now, I'm not showing you any other blue chip shares at this point. I'm only showing you the set number of, and it's these shares. I'm showing you these shares specifically every week because I want to show consistency. I don't want to give you trading these shares this week and it gives you these returns which happen to be good. You know, I may be accused of picking the fruit at its ripest point. These have been consistent over the months I've been showing you the videos, and they've been consistently giving about $400 or $500 of returns a month based on these same shares. I don't want to be accused of picking, for example, Commonwealth Bank this week, and then next week I choose a different bank or a different share altogether. So I'm giving you the same shares, blue chip shares each week for consistency as a snapshot for each of the trades I make. Likewise, the indices I'm showing you, the indices are also consistent. I want to show you consistencies every week, each week on week, how they're returning those returns. What returns are gained from these trades? Again, I'm showing you the actual dollar amounts over the total time period. In this case, it's 17 months. And I'm also showing you the monthly returns on average, what it gains for both the blue chip shares and also the indices. So, and also the percentage returns for that, and also the buy and hold returns in terms of percentage returns. So you can see there they're quite healthy returns. So hopefully that puts to rest any doubt in terms of the profitability of the trades made. How much time should I spend daily to trade such positions? Well, again, going back to the chart, if I was to trade this, for example, manually, now again, I'm doing this using an automated program as for the demo, but if I was to do this manually and I was trading these particular stocks, I'd go through one at a time, pull up my Commonwealth Bank chart along with the indicators, and let's assume we're back here in this time period. I'd say, righto, the indicator shows an entry point there according to the CCI 100 on a 15-minute time frame. I'd make an entry there, and it's above the MA 200. I'd make an entry somewhere along that area in one of those periods. I'd wait till the time frame breaks below the CCI breaks below our zero line, which shows an exit point, and it does break below that. And we've also remember one of the parameters from our strategies is to make sure you're in a profitable stage. So we're in a profitable stage here, and we're exit. And here we've made $104. Not a huge amount, but over the 2.5 weeks, it's better than a kick in the teeth. So we want to make sure we're above our profitability stage, and B, the entry point or the indicator shows an exit as per the CCI 100 breaking below the zero. Again, refer to our refer to our refer to our strategy page for more details in terms of the simple trading strategy, the average down process, and all these other additional strategies and money management, which helps explain that. So in terms of time spent daily, if I was to trade these shares, these 1, 2, 3, 4, 5, 6, 7 shares on a daily basis, I would literally spend, okay, where are we today? We've entered above zero. I'd make an entry. I'd buy $2,000 worth. Done. That was a deal. That was a trade made. Along here, next day, okay, the CCI 100's above there. We're in a profitable trade. I'm staying in a trade. Next day, I'm staying in a trade. Next day, I'm staying in a trade, and so on until the exit levels or exit strategy is met, and that's where I would exit. So each day, I would spend no more than a couple of minutes looking at the chart, looking at my indicators until I'd exit out. So on average for these series of shares, I might spend say 2 or 3 minutes per share. So let's say 15 to 20 minutes to look at all these shares on a daily basis. Are dividends or costs factored in the return shown? Well, a couple of things. This shows the program here does allow for the costs of brokerage to be factored in. Now, in my case, I factored in a brokerage of $8 per entry and exit, and every time it enters a trade, I add another $8 of cost to that. It doesn't include dividends in these trades. So if a dividend is payable, that's in addition to the trades or the returns made here. So, and also here I'm trading actual shares. I'm not trading CFDs for shares. In my indexes, I'm trading CFDs, and that charges a cost on a daily basis. So you've got to be aware of that. Likewise, in the CFDs for indices, that also pays out dividends as well. So if the ASX pays dividends over the number of ASX 200 shares for that particular time period, I'll receive those dividends as well. That's another reason I don't go short in these markets. I'm trying to be very conservative. I trade blue chip shares. I only go long because, again, if you're going short, especially in CFDs, you pay out dividends to those people that have gone long against you. So I only go long in my strategy to avoid paying out excess costs than I can afford. So trying to minimize your costs as much as possible. So in summary, as well as the capital gains, as per this appreciation here, the capital gains here take into account brokerage. It doesn't take into account CFD trading costs. If you're trading CFDs, it only gives you the return in terms of dollar returns and dividends. What other indicators systems have been tested? Now, I've also tested many other systems, including the stochastic indicator, the RSI, multiple moving averages, etc. And just to give you a quick summary of some of the results, I've gone and tested, without getting into the detail, I've gone and tested many programs using many different types of indicators. And I'm not going to go into the detail because it's too time consuming for the sake of this video, other than to say that what I've found is the CCI 100 and the strategy that I'm using. And again, if you refer to this, these videos in terms of the simple trading strategy and the average down process, that explains in detail the strategies I use and the indicators I use and how to enter and exit in detail. I have tested other indicators and they haven't been as profitable in terms of what I'm doing here. The other thing to make mention as well is you've got to be very careful. You don't enter, when you're going, like in this case here, where I've entered multiple contracts, you can see here during COVID, that was early 2020, we entered back here. Now, we don't want to make too many entries as a price goes against us. We don't want to get too many entries when a price goes flat. That's why, as in this example here, we entered back here. The price went pretty much flat for that period. Then it dropped below our point of re-entry, and that's where we entered another lot of shares there. In other words, we want to allow for enough drop in the price before we enter more. We don't want to enter too many times there. Otherwise, especially with CFDs, you're going to be over your margin account. So when you get a margin call, you'll be pretty much a lot in the red, and you want to avoid that sort of cost to your portfolio. So again, please refer to our trading strategies in these videos, and that explains in detail why I don't enter too many times, and I wait for that price to depreciate enough before I find another entry point in my strategy. So hopefully that's helped you with some of those questions. Of course, there might be many other questions you may have. Feel free to put them in the comments, and I'll attempt to answer them in future videos. Thanks again, guys, and happy trading.